Happy Friday, traders. It's 8:04 a.m. Chicago time on the 27th of April, 2018. Thanks for joining me again. It is the end of a very interesting week trading. We got a little bit of movement this week, Tuesday onwards. We're thankful for that. The overall market stance this morning, first, derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, DAX leading the pack up 1%, 122 points. The NASDAQ follows. NASDAQ, of course, had some more big earnings yesterday, Intel, and so on. Looks like we have a mixed bag, really. The pound is a laggard. The pound is down 1.23%, trading at 137.84. And crude, the June contracts trading at 67.94, down 25 cents. That's how things are shaped up. As of this exact moment right here, the S&P minis are trading on top of settlement at 2674.50, unchanged or unched on the day. And that's how we roll this morning. We have a very nondescript market. So let's move on and look at what was expected yesterday. First, you know that GDP came out, some employment cost information came out. It's becoming more and more important in terms of yield. And the only thing that's left really is the 10 o'clock Eastern University Michigan confidence. This is a final number, expecting 98 for April. Not expected to be a mover. The final number generally isn't so surprising. Yesterday, the expectation was for the market to open in an open auction, drift down towards the prior day's high, and then pop up to 2667. That's pretty much what played out. Here's what we got. Open, drift down, consolidate, pop, and then consolidate, and then pop up again. So we ended up pushing to 74, to 75.50 and finishing at 74.50 or settling at 74.50. That's what we had yesterday. Scenario one was dead on, and also yesterday was all about sitting and waiting for that first pop. Why? Because although we would love to be long here and somehow have a crystal ball or take a 50-50 chance that it might drop into the range or might continue per scenario one. So scenario two has it falling into the range down into 26.33. And that's how you catch the move, I guess. You just set your stop and just roll the dice or flip a coin, really. The thing that trader, at least I had to contend with is a half hour back and forth before it popped, and then the trade triggers on the pullback in the direction of the pop, and because we had a gap open and we did not close the gap or enter the prior day's range, the drift is likely to be long, and so yesterday I completely missed this beautiful pullback against the mid, against VWAP, against the opening swing high, against the stock zone. It was all there. Just completely missed it. Instead, I was getting short scalps, the next level up and the next level up and the next level up. Ended up doing okay because didn't overstay the trades, and we had some pretty good rotations back and forth on what turned out to be a normal variation day. And so, but the boulders, the foundation for the day, and those of you who were in yesterday's webinar at Convergent, we talked about this at length, and also my audio updates in the member chat. the direction of the market really supported longs yesterday. It's just blaring longs. So it is what it is. The next opportunity was near the close, right in here. Pull back to the prior peaks for a push into the close. And of course, Amazon helped that out. We closed right near the high tick of the day. So that's where we are. That's the action yesterday. So again, we got scenario one almost on the dot, except for the target. I was modest with my target. I had it at 26.67 and it went to 26.75. The overnight session. The overnight session is pretty much all. Well, it's even right now. We spent most of the overnight session just drifting down into yesterday's point of control, which is right here. Just open, drift down, and sideways, and now we're back to even. So the overnight inventory on price is flat. The overnight inventory on volume, though, is really high for the overnight session. So I'm not sure why that is. There's that question, that deadly question, why. We have pretty good volume on the overnight session, 145,000. And so overall, what this profile is telling us is the market was in complete agreement on value, has tested value on the low side, has a pretty decent taper, has tested value on the high side, although very briefly, pretty decent taper, spent most of the session in the middle. It's balanced, and it's starting to move away from that balance. So you notice that the overnight low and the overnight high in between these day stock zones, again, built on this, the key low volume node from yesterday. So that's where we are. What does that do to carry us forward? Before we talk about that, guess what we're going to talk about? We're going to talk about like Friday. So take a moment, find the thumbs up guy, the thumbs up button on YouTube. And if you can't see it on your screen because you're looking at it in an embedded window or whatever, find the YouTube logo, click on it to go to the live stream on YouTube and hit the thumbs up button, please. Do it at some point before you leave today. What are we looking for today? So overall this week, what we've done is we've moved down from Friday's close, moved all the way down, tested 26 to 26.11, and we've drifted back up, and we are basically back at Friday's close. So last week's close is 26.72 and a quarter. So what we have this week is a kind of an excess low on the weekly chart, right? We drop, we open on Monday close to where we finished Friday. We drop, and we are trading back up here. So we have an excess low bar or candlestick. This morning, opening in range, in value, with plenty of support below. However, let's zoom in a little bit. These gray bars, by the way, are just stock zones. Those are my areas that I'll take action in. Okay, so those are also my targets. So we have an open auction. Currently the market's back in balance. The expectation is for the market to continue its drift higher on the open. I expect it to push towards this 26.83 area. However, I do expect the market to take a test into the point of control at some point to balance out and to finish potentially in the same spot. Today I'm expecting a drift in the market. We don't have a very good indication or context, or the market has not provided a very good narrative for what it wants to do next. We did leave a gap below us, albeit 2 ticks. But what we have here is a nice trend, and we're approaching the end of the week. The expectation is for that to continue. However, I expect the market to fail at some point to continue higher and for it to dip back in. And I expect it to test even as far down as this 2663 area, which is the key support for the day. It's the line in the sand. Okay. The secondary expectation, open auction again, drift down, get this test done early, push down, find a base, put in a corrective structure, a low with a small push, pull back to a higher low, and then we start to drift higher for a continuation up towards 2683. That gives us about 20 points of range. Not expecting much more of that than that for the day. Also not expecting a lot of news flow that would impact this. Okay, the South and North Korean problem is going away. Leaders shaking hands at the DMZ yesterday or this morning. It's nice to see. Always nice to see peace. However, we still have 10 years lingering near 3%. We have pressure from the employment cost number that came in with the GDP release this morning. But we also have really good earnings. So a lot, some mixed winds that we're sailing through here. But those are the 2 key scenarios. Again, please hit the like button before you head out. I'm going to keep this short and sweet, but I'm also going to remind you it is Friday. It is the best day to be patient, relax, and try to let the market tell you what it wants before you just jump in right at the open. Friday is a good day to get sucked in to a bad trade that you end up defending and end up investing too much emotional and financial capital into. Don't do it, okay? And it's a good day to finally top off your journal to look for areas that you need improvement on for next week. If you're not doing that cycle of tracking your performance, being critical of it, defining your errors, defining your goals for next week, and then focused on trading to eliminate those errors for next week, you're wasting your time. I'm just being honest with you. Good luck.